Hello everyone, how's it going? In today's video, we're going to reverse engineer the GxT model. We'll go over the basic logic and framework of this model in a way that I will understand if I were a beginner trader. And for what we're going to learn in this video, I give credit to Guid and T-Trades. Guid created and assembled the GxT model, and a whole lot of the concept we're going to use in this video was being introduced by T-Trade through the Fractal Model. So I highly recommend you go check these mentors out. They are amazing. Learn a whole lot from them, including what I'm going to teach you in this video. So start with the framework of this GxT model. The GxT model has three key components, and like every other model, we need bias, we need narrative, and we need to confirm that narrative before we can get to our entry. And to get bias, at one point we're going to utilize a fractal model, or we're going to utilize a fractal model paired with a key level with confluence like SMT or PSP. And to get narrative, we're going to utilize a fractal model paired with key level with confluence like SMT or PSP with the element of time. And to confirm our narrative, we're also going to utilize a fractal model paired with the key level, confluence SMT, PSP, and with the element of time before we can arrive to our entry. So you'll see that the fractal model is really at the center of this GxT model. In other words, for you to understand the GxT model, you need to have good knowledge of the fractal model. So what is the fractal model? I'll put it in simple terms for you. A fractal model is just a developing swing point strategy that permits you to participate in the expansion phase. Like for this example, you have candle 1 trade into a key level. Candle 2 failed to display below the low of candle 1, closing back within its range. Once you get this, candle 2 close back within the range of candle 1, then you can anticipate candle 3 to expand in the opposite direction. So you let the reversal form, then you trade the expansion. And this is how this candle 2, which is the reversal candle, is going to look like on the lower time frame. You have the lower time frame reversal signature, where you have expansion into a key level and expansion away. And to make you understand this signature, I'll put it this way. It has to be a single colored candle into a key level followed by an energetic single color candle away from it, closing above the series of down close candle, or if it is a single candle, it should display above that candle. Once that happens, that becomes a CST, that changes the state of delivery, confirm this higher time frame reversal signature. And you know that once you get a candle 2 close back within the range of candle 1, you're anticipating candle 3 to do what? To expand in the opposite direction. And this is how it's going to look like. You have candle 1, candle 2 reversal candle, then candle 3 will be expansion candle. So you only seek to trade this candle 3 in a fractal model. You want to let this whole candle 2 close. Then you take part in the expansion phase, which will be candle 3. It will open, trade into a key level on the lower time frame. We have a key level here, which is swing point, establish the low of this daily candle. If it is a daily candle, if it is a 4-hour candle, you establish its low in a key level. In this example, we have a swing point. It could be a fair value gap or an order block. You establish its low, then expand away from it towards your draw on liquidity. And you need to know that you only deal with individual candle when you are on the higher time frame. But once you get to the lower time frame, you deal with structure. What that means is do not go on the lower time frame and start looking for C2 closure. No, you don't want to go on the 5-minute time frame and start looking for a candle 1, candle 2, then anticipating candle 3 to expand. No, you only anticipate this on the higher time frame, like the 30-minute time frame, the 1-hour time frame, the 4-hour time frame, the daily time frame, and the weekly time frame. What you do on the lower time frame is looking for these signatures. Lower time frame like the 5-minute, 30-minute, and the 1-minute time frame, you only deal with structures. You do not want to be dealing with individual candles once you drop that lower, right? So this is what you get. You'll have candle 3 expand away after being confirmed by this reversal signature on the lower time frame, which also fall within the higher time frame reversal, which is the candle 2 closing back within the range of candle 1. And you see that you will not want to depend on this trading on a single time frame, right? This might occur on the daily time frame. Like I mentioned, there are multiple higher time frame. It could be the 30-minute, the 1-hour, the 4-hour, and the weekly time frame, or even the daily time frame, right? So how can you trade these different time frames knowing where to execute? Let's say you identify a fractal model on the 1-hour time frame. On which time frame will you look for this reversal signature? And let's say you identify a fractal model on the weekly time frame. On which time frame will you look for this lower time frame reversal signatures to execute from. And if you identify a fractal model on the 4-hour time frame, on which time frame are you going to enter on? This is where we have the time frame alignment. When you are dealing within the weekly fractal model, you execute on the 4-hour time frame. If you are dealing within the daily fractal model, you execute on the 4-hour time frame. If you are dealing within the 4-hour fractal model, you execute on the 15-minute time frame. And if you are within the hourly fractal model, you execute on the 5-minute. And if you are dealing within the 30-minute fractal model, you execute on the 3-minute time frame. So you see that there will be times where you identify the fractal model on the weekly time frame, but you do not want to trade on the 4-hour time frame because it will require you a large stop loss, which maybe you don't have enough capital to handle that. And just for a better risk to reward ratio, you want to drop lower on lower time frames, like the 1-hour time frame. That is where profiling comes in. If you identify the fractal model on the weekly time frame, like let's take for example, this right here is a weekly time frame, and you are anticipating candle 3 to trade in the opposite direction. You can profile that on the daily time frame, right? You can profile that weekly fractal model on the daily time frame. And if you identify a daily fractal model, you can profile that daily fractal model on the 4-hour time frame. That is where GxT comes in, because the GxT model deals with identifying the daily bias, profiling that daily time frame on the 4-hour time frame, confirming that narrative on the hourly or 30-minute time frame, and executing on the 5-minute or 3-minute time frame. Thus, the GxT model is just aligning expansion candle from the daily time frame down to the 4-hour time frame, the 1-hour time frame, and execute on the 5-minute or 3-minute time frame if you are dealing within the 30-minute fractal model, right? So if you do not want to trade the daily fractal model, you can profile it on the 4-hour time frame. And if you do not want to trade the 4-hour fractal model on the 15-minute, you can profile it on the hourly time frame. So that is what the GxT model is precisely doing. So we're going to go over the key of this GxT model, which is the 4-hour profile, the daily profile on the 4-hour time frame, right? Assuming this right here is candle 3 of the daily fractal model, which is candle 3, and you have to profile it on the 4-hour time frame. The candle will open low, put its low then before expanding higher. So when the candle open, it is trading lower into a key level, and I have a ton of examples right here that we're going to go through. So we have here the first example. It is price, the daily candle opening, trading into a 4-hour order block, presenting what? A fractal model. You have what? The element of time. The candle open at what time? 1800, and this is indices or futures. So you open at 1800, trade into a key level, present what? A fractal model on it. Then you can anticipate what? The next candle, which is candle 3, which will be the 200 candle, because you have 1800, then 2200, trade into the key level, close back within the range of the 1800 candle. Then you can anticipate the 2 a.m. candle, which will be candle 3, to expand towards your draw on liquidity. So you're using the fractal model, the element of time, and the key level to establish what? The bias of this 2 a.m. candle. And we have another example here where we are trading from external range liquidity back into internal range liquidity. You have what? The daily candle open at 1800. The 2200 candle did not trade into anything relevant, but the 2 a.m. candle trade into the swing low, close back within this range. So we have a fractal model here, which enables you to anticipate the next candle, which is candle 3, the 6 a.m. candle, to expand into this draw on liquidity, which is a fair value gap, right? And we have our next example here. We have from internal range liquidity to external range liquidity, where you have the daily candle open at 1800, the 2200 didn't trade into anything, consolidated within the range of the 1800 candle. The 2 a.m. candle trade into a fair value gap, but the 6 a.m. candle form what? A fractal model within that key level. Now that gives room for what? For the 10 a.m. candle to expand towards your drawn liquidity. So if you are to trade this, you would trade what? The 10 a.m. candle to your drawn liquidity after this fractal model confirms the low of the day, right? And we have our last examples right here, where you have the 1800, which is the opening of this daily candle, the 2200 trade into the key level. Then we have 2 a.m. close above the opening price of the 2200 candle. And now this is the second type of swing. And if you have been going through my videos, you will know this type of swing point, and I put it here intentionally so just to make sure you're following up with all the videos and to know that the model doesn't have to precisely depend on this C2 closure. You can also have a swing like this confirming the low of day, and you anticipate candle 4 being an expansion candle to trade to your draw liquidity. So you have to be flexible with that. And if you are to align this where you have bias, which is a daily time frame, and you have your narrative building up, which is the day opening at 1800, trade into a key level from a fractal model being confirmed by an SMT. So this SMT in a key level with the fractal model confirms the low of day. Now you can anticipate the next candle to expand towards your draw on liquidity. Now you do not want to trade this fractal model on the 15-minute time frame, which means you want to profile this 4-hour candle again. You will do that on the 1-hour time frame. That is where narrative confirmation comes in. You are confirming this narrative on the 1-hour time frame, and you are going to seek the same signature. You want this 4-hour candle to open, trade into a key level being confirmed by an SMT, and in most cases that SMT will occur in the form of strength switch. Because once you have this reversal here, this initial reversal, there will be displacement, and you can see that here. True reversal displays and create gaps. So once we get that displacement and create gaps, you will have to wait for a reaction away from that gap, from those gap, if price return to it, and you have an SMT to confirm that fractal model or the low of the 4-hour candle, right? It has to be confirmed by an SMT, and in many cases, like I said, it will happen in the form of strength switch. So you are just aligning expansion candle from the daily time frame, the 4-hour time frame, the hourly time frame to execute on the 5-minute or 30-minute time frame. So this is the GxT model in general. You have your bias, your daily bias, you have your narrative, which you anticipate in the daily candle to open trade into a key level from a fractal model. Then you anticipate to trade the next candle, and you can confirm this narrative on the hourly time frame. You can confirm this narrative on the hourly time frame where you'll be seeking the same signature, which you'll need the 4-hour candle to open trade into a key level from an SMT being followed by a fractal model. Then you can anticipate the next candle to expand, the next series of candles to expand towards your draw on liquidity, and you're gonna need a lower time frame reversal signature or an entry signature, which will be expansion met with expansion being confirmed by a CSD, right? So in general, this is the GxT model. The GxT model is basically aligning expansion candle from the higher time frame down to the lower time frame. So if you're still having trouble to work around aligning the daily expansion candle with the 4-hour expansion candle down to the 1-hour or 30-minute time frame to execute on the 5 or 30-minute time frame, then you need to watch this video which I've put on this channel, which is aligning the weekly profile with daily bias. I literally put everything there in depth. And just to let you know, there is no format that anyone can put this concept in that is going to stick in your mind if you do not put in the work to learn. Some of these images that you see, the signatures, you have to recreate them yourself. Define things in your terms in the way that sounds best and fit within your framework. You understand? You have to put in the work to learn in order to know what you're really working with. I learned this model from Guid. Therefore, if anything I mention in this video or on this channel that you do not understand or doesn't sound right with you, you can always refer back to Guid. He created and assembled this model. He's always going to be the master in it. Learn what he say, practice it. The good way to learn anything is by putting in the work yourself. I cannot teach you what experience will. So you have to fail, fall, do those mistakes that you are scared of making, make them, because that's where you're going to learn. There's no better way to do this, man. Anyways, I think that's going to wrap it up here. See you in the next one. Sorry, unfortunately, we're not going to go through examples here because I've literally done it all. And this video is just like a cover on whatever has been put here. I've put this video already here on this channel in depth, in pieces. So just putting it back together literally require no examples, to be honest. So I'm going to put another one real soon. So we're going to get examples on that.